Welcome to Dr. Fred Markets. This is not financial advice. Every day, the world of finance, crypto, and artificial intelligence moves fast, really fast, and staying informed is the only way to stay ahead. That's exactly what we do here, together. Let's get into today's video.
AI stocks just became your favorite short seller's piggy bank. Trump floats a government stake in top AI companies. The Justice Department kills a $1.8 billion payout fund, and the chip sector just face-planted hard enough to drag the Nasdaq down more than 4%. Nvidia bleeds over 6% in a day, vaporizing tens of billions in market cap, while the S&P pukes 2.5%, and suddenly everyone rediscovers gravity. At the same time, buried under wedding gossip about Taylor Swift and Travis Kelce and live updates on Knicks versus Spurs, the real action is this. Short sellers are quietly feasting on this AI-fueled chaos while retail stares at their favorite to-the-moon charts. Here's the tension. When politicians start eyeing equity stakes in AI darlings, at the exact moment the sector cracks, shorting stops being Vegas and starts looking like risk management. Let's be precise. Signal 1, the chip bloodbath. Nvidia at 205.1, down 6.2% today. This stock was treated as the central bank of AI. Now it trades like a meme stock on a bad earnings call, except this time the whole sector joins the bar fight. A 4.2% Nasdaq flush in one session is not volatility, it's a sentiment transplant. When the market depends on one story, AI saves everything, and that story hiccups, correlation goes to 1 and liquidity runs for the exits. Signal 2, state intervention noise. Trump hinting at a government stake in top AI companies is not a random campaign brainwave. When the state starts talking about owning slices of your tech darlings, the risk profile changes overnight. You don't just trade earnings anymore, you trade political mood swings, antitrust crusades, national security drama. Short sellers love this. Policy risk is their favorite seasoning because it scares long-only funds, forces deleveraging, and amplifies downside moves. Signal 3, distraction theater. While everyone scrolls wedding rumors and NBA drama, the Justice Department quietly says a $1.8 billion payout fund is not going forward. Translation: promised money evaporates in a single sentence. That's the environment you're in. Capital is conditional. Headlines are sugar. Cash flows are negotiable. The only players that consistently get paid in that circus are the ones on the other side of blind optimism: disciplined shorts and hedged traders. So here's your cliffhanger. When AI euphoria collides with political intervention and disappearing payouts, who actually wins, the bag holders or the vultures betting against them? The connection: short selling stops being an edgy gamble and becomes a basic tool for surviving narrative markets. Today taught you one thing.
Does what you just heard make you want to dig deeper? Good, because that curiosity is exactly what brought you here, and the second part is going to take it further. Let's go.
When one sector, AI chips, drags an entire index into a 2 to 4% drawdown, you don't own a diversified portfolio. You own one story with different tickers. Shorting, or at least buying protection, is how you tax that story when it runs too hot. Mechanism time, no fluff. Short sellers aren't cartoon villains smashing innovation. They're the only traders who get paid when hype meets math. When Nvidia trades at nosebleed valuations and every politician wants a photo op with AI, shorts watch for 3 things: concentration, leverage, and policy noise. Concentration: when a handful of AI names drive most of the index return, short sellers target the weakest link in that cluster. One wobble, the whole trade shakes. Leverage: call option addicts leverage upside with zero respect for downside. When the move reverses, market makers dump stock to hedge, amplifying the fall. Shorts ride that cascade. Policy noise: talk of government stakes, antitrust heat, or national AI champions injects regime risk. Shorts know the market misprices that risk until it's too late. They enter when the crowd treats new regulation as a nothing burger. You're not forced to become a full-time short shark, but you are forced to stop pretending that buy and hope is a strategy in a market where headlines delete billions by lunch. Here's what you learned today, distilled to one new skill. Short selling is not an all-in bet against humanity. It's a seatbelt you install when narratives drive your portfolio more than earnings. Action for normal humans, not hedge funds. 1. Identify your AI exposure. List every stock or ETF in your account that relies on the same AI story as Nvidia. If one narrative drives more than 20 to 25% of your total portfolio value, you're not diversified, you're concentrated. 2. Instead of YOLO shorting random tech, look at broad protection. Inverse ETFs, or put options on the sector or index that's overweight AI chips. Single trade, spread out risk. You're short the story, not one ticker. 3. Treat policy headlines as trading signals, not entertainment. Government hints at stakes, new regs, or national champions? That's your alert. You scale in protection when the crowd shrugs, not when CNBC is screaming crisis. The verdict: AI tourists pay tuition, disciplined skeptics collect tuition. This is not financial advice, but here is the truth. In a market where one sector's hangover drags down an entire index, learning how shorts think is not optional. It's survival. Don't worship innovation. Tax the hype. Subscribe, come back tomorrow, and I'll show you the next place the story is lying to your money. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.